Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we got a huge one on our hands here, you guys. We're going to be talking about none other than AMC. Now this is a company that's been in the news a ton lately. It's probably one of the most talked about stocks in the entire market right now. So I wanted to give you guys my perspective and walk you through a few of my thoughts on this company moving forward. Now before we get into it, please take a second to smash that like button. It's 100% free to do and it helps me and the channel out in a huge way. If you're not already subscribed to the channel itself, McNallie Money, feel free to do so. And let me know in the comment section below what you think of this review, if you're currently holding any shares or options of AMC, and what you think about this company moving forward. And one final note, you guys, if you're currently holding any crypto, I would suggest you take a look in the video description section below and check out the link to BlockFI. This is a great way to earn interest on your cryptocurrency while it sits in your account. And as we all know, it's been a rough couple of weeks for the crypto market itself. So why not take advantage and earn some money while you wait? And without further ado, let's roll the intro clip and get into today's video. Okay guys, so we're finally doing it. I've caved in. We're going to be talking about one of the big meme stocks on the channel today, none other than AMC Entertainment. So AMC along with GameStop are probably the two most talked about, most popular stocks in the entire market right now. I've been getting a lot of requests from subscribers to take a look at one or both of these companies in a little bit more detail. So I wanted to kick things off here with AMC. So in terms of how this video is going to be laid out, we'll talk about some of the recent price action. I'll show you guys my trade on AMC. Then we're going to talk a little bit about their business model, which really seems to be something that a lot of people are overlooking and really not talking about, as these stocks are really now trading off hype and retail trader popularity rather than core business fundamentals. So I wanted to take a look at their actual business itself here. And then we're going to obviously talk about some of the news, recent media articles, and my price prediction on AMC moving forward. So to start things off, I've got the chart pulled up. This is as of close on Wednesday, June 9th. So you can see a ton of volatility in this name. Obviously, this company has run up exponentially over the last couple of months, but we did see a fairly substantial pullback today. So the stock itself was down about $5.71 or 10.5% a share. And that actually meant AMC closed out today's session at $49.34 US. AMC trades on the New York Stock Exchange, so everything we're talking about here is going to be in US funds. Now in terms of after hours trading, AMC is down an additional $2 or about 4% per share. So it'll be interesting to see how this fluctuates overnight here. But between regular and after hours trading, this stock definitely is taking a little breather here. Now if we look at a 6-month chart on AMC, you can see the growth has been truly exponential for this company. This was a stock that was trading under $10 as recently as May here, and we've now seen AMC hit highs all the way up into the $60, $70 kind of price point. So definitely riding the hype, definitely taking advantage of the recent popularity and interest from the Reddit, Wall Street Bets, forums, those type of communities. And really, in my opinion, you guys, more power to these companies. Management teams across the board are really starting to take advantage of these price movements. They're raising capital, they're paying off debt, and realistically, they're getting their companies in a lot better position. I really think to some extent, everybody involved with these companies, whether it's the investment bankers, the retail investors, the Wall Street Bets crew, they understand that these type of prices aren't sustainable. But the question is really, how high will these stocks go and for how long will they stay there? And hopefully those are some of the questions that we try and address or answer in this video. So you can see based on close here at $49.34 per share, this is now a $25.3 billion company compared to a $5 billion market cap only a couple of months ago. So it really is quite astonishing to me and a number of other people who've been watching these stocks how quickly the share price can run up and how big of impact this really can have on the overall business and the underlying fundamentals of the company itself. Now, as promised here, you guys, to kick things off, I did want to share or disclose my position in AMC. Now, I can definitely say meme stocks do not fit my investment strategy, but I did want to partake in some of the action here. So this is more of a speculative play. Now, if I pull up my option tracking sheet, this is actually what I use to document all of my trades. You may or may not have seen this in some of my previous videos. So as you can see here, in the last 15 or so trades, I've only had about 4 losers. So I've definitely been seeing an improved win-loss ratio. You can see a number of different trades here. So all my tattooed chef positions, drop box. The one I wanted to call your attention to is actually this one here, which was a $5 strike long call on AMC. So I had actually bought this back on January 27th. It expired on February 12th. So it had a 16-day window in terms of expiration. And I was actually able to buy this for $5 per contract. I only bought one contract and turn around and sell this within a 20-minute window for $10 per contract. So I was actually able to generate a $500 US return in about 20 minutes of my time by trading AMC. Now you can see right below, I tried to do a similar thing on Nokia, and I actually ended up losing $296 in a 4-day period. So overall, between the two, I'm up about $200 US. Now the reason I bring up or even mention these trades in this video really isn't to talk about the overall value, but it's because it really encapsulates the spirit or the essence of these meme stock trades. So people are really looking at this as a quick way to make a lot of money in the stock market, and that's exactly what I was able to do on the AMC trade. But on the flip side of that, it's also a very quick way to lose money in this type of market or this type of environment. So I wanted to quickly show you guys one win and one loss as it relates to these meme stocks. Again, not because this is a big percentage of my portfolio or investment style that I like to use, but really to show again why people are so infatuated by these meme stocks and really the potential or the power of these price movements on the shares and even more so on the option contracts that are associated with these stocks. Now shifting gears here, you guys, I wanted to take a quick look at the AMC business model itself. I've watched a lot of live streams and videos on YouTube about GameStop, about AMC, and you really rarely hear anybody talking about the core business. They're really just talking about the upside, the risk, going to the moon, profits, losses, whatever the case is. So AMC, in a nutshell, is really a theater company. So they're projecting to serve about 200 million guests worldwide this year throughout 380 various AMC theater locations. Now we're going to look at some of the numbers in a little bit more detail on the next slide. This actually only represents a fraction of their overall theaters. Because of the pandemic situation, a lot of the theaters aren't operational, and the ones that aren't in full capacity. Now, AMC has been around for nearly 100 years. They were founded by Stanley Durwood in Kansas City, and he actually started redesigning these theaters and built the world's first multi-screen theater chain, which he then incorporated and expanded nationwide in the US. Now, since then, AMC has acquired a number of different theater chains, obviously building their overall portfolio of locations, and they're really known for their innovation or enhancing the experience for guests along the way. So the actual armchair cup holder was one that was pioneered by AMC. Since then, they've added plush chairs, they've improved the food and drink options for their guests, and they've really expanded the business to find sources of revenue outside the actual ticket price itself. Now, if we fast forward to more recent years here, Adam Aron is now the CEO of this company. He took over in 2016, and his most notable acquisitions were actually through the Carmike Cinemas in the United States and Odeon Cinemas in Europe. So they continue on this trend of acquisition, and they're really focused on becoming the premier and #1 cinema or movie-going experience worldwide for new and returning guests alike. So as of today, AMC Theaters has a presence in the top 50 DMAs in the United States. So DMA stands for Designated Marketing Area, and they actually call out holding the #1 or #2 position in terms of overall market share in each of the top 15 DMA or Designated Marketing Areas in the United States. So these are cities like New York, Los Angeles, Chicago, Philly, San Francisco, Atlanta, Dallas. So these are the biggest cities, biggest markets in the United States. The company operates 22 of the 50 highest grossing theaters in all of the United States, including 4 of the top 5 theaters in all of the US. And that really speaks to their innovation, their experience for their consumers, and their overall penetration into some of these big major urban markets. Now, as mentioned on the last slide, only a fraction of these theaters are actually up and running because of the pandemic right now. But overall, AMC actually has just over 1,000 theaters worldwide, so 1,004 theaters with over 11,000 screens. So this is a very well-established business, you guys, and it really doesn't get any bigger than this in terms of the movie cinema kind of experience. Now, within that 1,000 theater portfolio, portfolio, AMC has really divided their focus into three main experiences or three different types of theaters for their patrons to go to. So there's the AMC branded theaters. This is what I'd say is kind of the more traditional movie theater experience in a major urban center. So this is going to include things like IMAX screens, Dolby surround sound, luxury recliner chairs, innovative menus, rocking seats, 3D, 4D experience. So a lot of the things that people really expect when they go to a cinema these days. They then have the AMC Classic. So these are located in smaller markets. These are a little bit more nostalgic. They have more classic items, things like pretzel bites, nachos, refillable popcorn, which actually comes with an annual pass, all at a great value, so a little bit lower on the price scale and a little bit more restricted or limited menu. And then on the other end of the spectrum, they have the AMC Dine-In brand. These are actually theaters that are equipped with full kitchens. They offer full service express pickup dining, and they actually have cutting edge or innovative menu items that you can't get at the AMC or the AMC Classic theater experience. So again, one company, but they've really divided their brand to appeal and target different segments of the movie-going market. So now that we've talked about the overall number of theaters and how they've really separated these theaters into those three distinct segments, I wanted to segue and take a look at some of the numbers. So AMC came out with Q1 2021 results on May 6th, so about a month ago now. And if you scroll down a little bit, you can actually see as of quarter end, so March 31st, 2021, AMC was operating about 585 domestic theaters in the United States, again with limited seating capacity due to the pandemic, between 15 and 60% of full head count. Now again, as of March 31st, AMC had 97 international theaters in operation with an average capacity of about 27%. Now the CEO, Adam Aron, speaks to some of the challenges that they saw over the past 12 months. Obviously, theaters along with theme parks, malls, retail, they were really significantly impacted by this pandemic, but they're starting to see guests return, and a lot of the big name movie titles that were delayed over the past 12 to 18 months are starting to make it into theaters, which is really driving attendance. So during the first quarter, approximately 7 million US and international patrons confidently returned to AMC theaters. So that's great to see that people are starting to return, and obviously that's going to drive revenue for this company moving forward. Now Adam then shifts gears and he starts talking about AMC's cash position and some of the equity or financing activity that took place over the past 3 months. Now, AMC has really started to raise a ton of capital based on the share price appreciation that we've seen over the past few months. And I think this is a really smart move on the part of management because they're really taking advantage of this opportunity to fill up the coffers here, to build equity in the business and get AMC in a position where they can continue to go out and acquire new theater chains while enhancing, renovating, refurbishing, whatever you want to call it, their existing portfolio of theaters across the planet. So over the past 5 months, AMC has raised nearly $2 billion in new equity and debt capital, including the conversion of $600 million in convertible notes at an equity price of $13.51 per share. Over the past 13 months, AMC has raised closer to $3 billion, so $2.9 billion of gross cash from new debt and equity capital. They've secured $1.5 billion of concessions from lenders and landlords and obtained more than $150 million of assistance from the European governments, while generating over $80 million from asset sales. So overall here, you guys, if we look at all the different capital actions together, we're talking about nearly $4 billion of progress for this company over the past 13 months. So tremendous improvement for this company's cash position. And considering this company had a market cap of about $5 billion just a few months ago, the fact that they've been able to raise $4 billion through these various activities is really astonishing and really impressive. So now that we've talked about the good news here, which is the ability of this company to raise money, I wanted to talk about some of the more concerning news that I see in this Q1 report. So if we scroll down and actually take a look at revenue, you can see that revenue came in for Q1 at $148.3 million. Now, in my opinion, that's an extremely low number considering this is a $25 billion market cap company. Now, that being said, revenue is down 84% over Q1 of last year. Obviously, a lot of that's to do with the pandemic and the limited theaters and capacity that they're currently operating with. but revenue in Q1 of 2020 came in at $941 million compared to 148 here in Q1 of 2021. And you can really see as you scroll through the different line items here, whether it's revenue, attendance, international market attendance, numbers are really down across the board on a year-over-year comparison. And 2021 has been a challenge for this company. Now we are starting to see a light at the end of the tunnel, which the CEO alluded to, but the numbers here definitely are concerning considering the market cap that AMC now commands. Now, as we continue to scroll through the Q1 report, there's a number of other things I wanted to call your attention to. So number one is actually where the revenue came from. So we talked about this $148.3 million in overall revenue, but what was really interesting for me as someone who's not super familiar with the theater industry is only about half of this revenue actually came from the admission or ticket prices. The other half was actually attributed to food and beverage. So obviously some of these enhanced menu items, those are really paying off in a big way for AMC. And overall, that represented about a third or $50 million of the overall $148 million revenue that they saw in Q1. The other $28.7 million actually came from what they're calling other theater revenue. That's going to be things like games, arcade, retail purchases, stuff like that. So really, if you look at food in combination with the other line here, that represents $78.8 million of revenue in Q1, or about $8 million more than they actually generated from ticket sales themselves. And that's actually quite a shift from 2020, where we saw about 60% of revenue come from admission and only about 40% come from food, beverage, and other theater activity. Now, obviously, if they can continue on that trend, that's great to see that patrons are going in here, they're buying their initial ticket, but then they're actually spending that amount again or slightly more on the experience while they're in the theater itself. Now, the other thing I wanted to call your attention to on this page is actually the average number of shares outstanding, or their diluted share count, in Q1 of 2021 versus Q1 of 2020. And when I saw this number, you guys, this was extremely important for me because you can see the number of shares that this company now has outstanding has quadrupled over the past 12 months. So they were sitting just north of about 100 million shares in 2020. They've now increased that to over 400 million shares. And that's directly attributed to a lot of that equity or capital raise activity that we talked about a few seconds ago here. So it's great that they have all this money. It's great that they've been able to improve their balance sheet. But at what cost to existing shareholders, you guys? They have significantly diluted their share count here. And at some point, they're not going to be able to continue to finance their business like this. So that was a number that really stood out for me. And that's one that I would definitely keep my eye on if you're invested in AMC and you're looking to hold this company for the long term, because anytime I see dilution to that extent, it's a really big red flag for me. So now that we've talked about AMC's recent price movement, we've talked about how I've traded this company, we've looked at their business model, their various different theater brands, we took a look at their earnings report, I wanted to start to wrap this up. So what does this all mean? We've talked about some of the bullish trends we're seeing here with theaters reopening and more diversified revenue. We've talked about some of the bearish trends we're seeing with diluted share counts and inflated market cap. How do I think personally you should trade this company moving forward? And am I personally going to be getting involved in this stock? So ultimately, at the end of the day, there's two ways that you can play AMC moving forward. You either are in the camp that continues to think this company will go higher and higher and reach these unimaginable highs, like this article on Forbes talks about here, or you have a different opinion and you think, hey, you know what, these levels are unsustainable and this company has to come back down to earth at some point in time here, and you're either going to buy puts or you're going to short this stock, hoping that the company's share price goes back to somewhat of a normal level over the next couple of months. Now, why I wanted to include this article here, you guys, is this is really interesting that one of these billionaire hedge fund investors is actually telling people or warning people against shorting AMC. Now, Thomas Petterfy is actually the founder and chair of Interactive Brokers, and he's a major player in this industry. And he's actually going out and cautioning retail investors and institutional investors, saying that, you know what, although the prices of AMC look to be inflated at this point in time, there's no telling how high this company could go, and they could really reach levels that we don't think are possible in a normal market situation or market conditions. And that's what I really wanted to highlight for you guys here. You need to understand that if you're investing in these type of companies, meme stocks, AMC, GameStop, whether you're going long or short on these names, these are very high risk, high volatility stocks. and you need to be willing to lose that initial investment. Now, that being said, there's a ton of money to be made. I shared with you guys how I was able to double my position in about 20 minutes. So I'm not saying that these companies should be off your list of potential investments, but what I am saying, you guys, is you need to understand the risk and understand that these are not following normal fundamental trading patterns or normal company fundamentals in terms of their revenue, earnings, EBITDA, PE ratios, traditional metrics that we use to gauge investments. And funny enough, I actually remember looking at some potential put options on GameStop a few months ago after their second big run up, thinking, hey, you know what, this is just not sustainable and this company has to come back down to regular levels. And I'm so glad I didn't, because 6 months out from when I had that initial thought, GameStop is now up in the $200-300 price point and they're flirting with all-time highs once again, and I would have lost my entire investment in that position. So a word of caution here, you guys. And again, I'm not saying this company can't go higher. I'm not saying this company can't go lower. I just want to ensure that everybody is aware of the risk when you're investing in these type of stocks. Now, this is one of the first quotes I ever read about stock market investing, and I thought it was a very fitting way to end this video. And it reads, "The market or stock market can stay irrational longer than you can stay solvent." Now, this quote is from John Maynard Keynes, who's considered to be one of the fathers of economic theory. And it really does sum things up in quite a nice way, and I have to remind myself of this all the time, you guys. Whether or not the stock market makes sense, the price that a company is trading at is realistically the price that somebody else is willing to pay. And depending on who that person is, they may or may not have the same opinion or view on that company as you do. And that's exactly what we've seen with the huge influx of retail investors and retail investment dollars into these meme stocks. It can be extremely hard to predict the direction and duration that these companies' share prices are going to move in. And for that reason, you guys, I would say if you're investing in these companies, use a very small percentage of your portfolio, understand the risk, and be aware that you may end up losing that entire initial investment. And if you can understand those three concepts and you're okay with that, then I would say go for it, you guys. These are a super high action area of the market right now. They're very interesting, they're very exciting, and it's a great way to get some exposure and ride these trends if you're aware of the risks and the potential rewards going into that trade. So that's it for today's video, you guys. I hope you enjoyed and got some value out of this video. Make sure you smash that like button. It's 100% free to do and it helps me out in a huge way. Let me know in the comment section below what you think of this analysis, the meme stock trend itself, and AMC as a company, if you're currently holding any shares. And on a final note, don't forget to subscribe to the channel, McNallie Money. We'd love to have you as part of the community. With that being said, thanks so much for watching and have a great rest of your day.